AT&T surging today after better than expected results. So what about the stock? Is it too pricey? Let's find out. William Power follows the company for R.W. Baird, and he joins us now from Dallas. William Power, welcome.
Thank you for having me.
William Power, AT&T results pretty much dependent on the iPhone. Is that wise?
You know, it's a two-edged sword for AT&T. The good news is the iPhone's going like gangbusters for them right now, as it has for several quarters. 2.4 million activations. That accounted for almost 70% of their post-pay subscriber growth. So that's clearly a big driver. That drives higher revenue per customer. It also ends up with lower churn, higher retention, which is all good longer term for them. But it does take a bite out of near-term margins. So we may see that the next couple of quarters. But still a long-term positive. The concern there is, at some point, if they actually lose that exclusivity, that's going to make the comps tougher.
But, William, doesn't AT&T have to pay for this? I mean, they pay that rebate to Apple, so for every subscriber that they sign up, albeit they get somebody to get onto their network, that costs them some money.
No, that's right, and that did impact wireless margins in the quarter, and despite that, they actually beat on the bottom line. There was a slightly lower tax rate, a couple of other moving pieces there. You know, long term, I think it is a clear positive for them as you think about the economics of the customers they're adding. But in the near term, you're absolutely right. They do take a margin hit because of that much higher than average subsidy loss.
Are they going to do that same strategy when it comes to netbooks? I mean, there was a report about how AT&T and a lot of the other telecom players, what they want to do is subsidize people's purchases of netbooks to get all those data services up and running. Is that the same strategy?
Well, I think there could be some similarities there, and it ultimately depends on the economic profile, and I think that's going to differ in each scenario. The iPhone really is an unusual situation where they're incurring a subsidy loss up front of close to $400, and the typical average subsidy hit on most devices is more in the line of $100 to $200. And so because of that exclusivity, they're willing to take a bigger hit up front. But, you know, to the degree these carriers can lock in higher revenue-generating customers long-term and incur a higher subsidy up front, they can really make those economics work. So,
William, what are you telling the sales force? What are you telling customers? Should they be adding to positions of AT&T?
You know, my expectation is that AT&T and really the big-cap carriers in general are going to stay in a pretty tight trading range here. And the issue really is the competitive environment. As you look at it today, it's become more of a zero-sum game in our estimation. You're at about a 90% penetration rate for every man, woman, child in the U.S. And I think what you've seen here over the last couple of quarters and last couple of years is AT&T and Verizon taking pretty significant share from Sprint and to a lesser degree T-Mobile. Our concern is that over time that's going to get more difficult.
What about the wireline business? Are you still seeing those secular declines, and are they going to accelerate?
Yeah. Well, that's a good question. That's been a tough business for years now. There actually were some positive signs in the quarter. It actually looks like consumer line losses are starting to stabilize, and they're still losing lines, which isn't good. But signs of a bottoming at some levels is a positive relative to the trends we've seen recently. But on top of that, the secular pressures they're facing, the cyclical issues have also clearly been a factor here in recent results. Enterprise revenue has been down. That's a function of job losses, the economy generally, and just generally less usage in both voice and data. So I think wireline is going to continue to remain a challenge overall for them.
All right, William, last question on AT&T for now. What about the data services business? Still going strong?
Well, I tell you, on the wireless side, it remains very strong. Text messaging was up still 100% year over year, and this is a business now that's been around for a while. Web usage on the wireless side is still growing. I think wireless data in total was up close to 40% year over year, and it now accounts for closing in on 30% of the total wireless service revenue. So that still remains attractive. And on the wireline side, you know, IP data is growing double digits with some of the legacy data products, though, in decline.
All right, William Power, don't go anywhere. Telephone companies delivering television, yes, but is it profitable? We'll find out. Are these strategies still on track? That's coming up. This is Taking Stock on Bloomberg. Both AT&T and Verizon, they're rushing to deliver television and other video products to consumers. But but is it working? Let's find out. My guest, William Power, he's an expert in the world of telecoms. He's an analyst at R.W. Baird. He joins us from Dallas. William Power, okay, so this strategy of delivering video and television, all those great services to consumers, both on the part of AT&T and Verizon, we know they're spending money at it. Is it working?
Well, they are making good progress. You know, AT&T, having just reported this morning, added almost another 250,000 video customers, and I think it is helping arrest or stem the access line tide on the core in the core consumer business. And likewise with Verizon, with its Fios product, you know, they've been making good inroads in their market. The good news for Verizon is, while it was more capital intensive, they've got a lot of that capital now behind them, so the return should start to look better overall.
And let's talk then about Verizon. Do you expect the same kind of share performance out of Verizon that you do have AT&T?
Well, of course, Verizon was up today, 4 to 5%. I think actually outperformed AT&T on the back of AT&T's numbers. So I think the expectations probably are already rising moving into the quarter. We've been at a $32 target price on Verizon, and it's close to that based on today's rise. I think there is a fair read-through on the wireless side. My expectation is they will also post solid wireless results, particularly on the postpaid side. They've been the most consistent in the business on that front. And I think the wireline trends you're seeing at AT&T will probably be similar to what we'll see at Verizon. So I'm not sure I'd be chasing it in advance of the quarter at this point.
All right, so don't chase either of these stocks right now, William, right? Because you've got a neutral rating on them. Talk a little bit about the wireless competition, and if you can, describe this postpaid and prepaid market strategy, the two differences, and why they're so important to understand.
Well, the most profitable segment in wireless historically has been traditional postpaid. And those are the customers that pay their bills on a monthly basis, typically subscribe to higher-end devices. Those customers typically generate better economics for the carriers, and that's where AT&T and Verizon have been laser-focused. What we've seen, though, is a transition in part, and the economy has probably fostered this as well, to a greater move and interest in lower-end products. And there are a couple of companies out there, Metro PCS, Leap Wireless, that have focused on this specifically. Sprint's rolled out a product called Boost Unlimited to really go after the prepay segment with a different value proposition. An unlimited voice and text plan for, call it, $45 per month, which really has resonated well with customers that have been pinched by the economy and those just looking for a better deal in the marketplace.
But what about the new offer from a company called TracFone? I mean, has that really thrown this whole prepaid market into disarray, just wrecked the pricing environment?
Well, it certainly created a significant investor concern, and you've seen that reflected in the stocks of Metro PCS and Leap Wireless, who have both been walloped here really over the course of the last 6 weeks or so. And I think what you're finding is, as you looked at the results generated by Metro, Leap, and then the early results from Sprint's Boost Unlimited, you've had others try to pour into the sector, and TracFone's been the most recent. They're the largest prepaid provider in the U.S. They resell other networks, and in this case, they're reselling Verizon's network. We haven't seen the results yet, and it's still early. They're just in trial markets, but there's no question running on Verizon's network that could be a serious competitive threat.
All right, but what about the stocks of Metro PCS and Leap Wireless? Do you think that those are better bets for profits right now?
Those are the stocks we've preferred in the wireless space, in part because they have a differentiated product, or I guess less differentiated with, TracFone entering the market in a bigger way. But we like the long-term growth characteristics there. Those stocks have been under considerable pressure as you look at the increased competition. Despite that, we're still expecting solid overall Q2 results. The headline risks, though, are real. The near-term catalyst is a bit uncertain, but I think longer-term off these levels, they should prove attractive.
All right. Now, talk, if you can, about Sprint and Nextel, right? I mean, if you'd bought the shares at the beginning of the year, they were up 154% year-to-date, so you could go home, cancel everything else that you do. But how do you go from here with Sprint and Nextel? I mean, is there really a viable model to take business away from AT&T or Verizon, for that matter?
Well, I think it's going to be tough. They're making inroads on the low end, but that's a less profitable business for them. And the key for that business to turn around long term is to turn around the postpaid business. But you hit the nail on the head. They're going against AT&T and Verizon, who aren't going to cede share easily. And so I think that's going to continue to be a tough battle for them. They'd hope that the Palm Pre would be a differentiator, and it is probably helping a bit. But, you know, it's not an Apple replacement, and I think longer term they've still got some tough challenges ahead on the postpaid side.
William, when you look at all of the new hardware, the smartphones that are coming on market, does that necessarily change the whole landscape for wireless data as well as wireless voice services because of the kind of integration that is being pitched, whether it be for netbooks or whether it's just these smartphones?
Well, you clearly are seeing device convergence, and without question, smartphones are becoming a much bigger piece of the overall pie. So if you look at, you know, AT&T as an example, you know, converged devices are, you know, now in the order of, I think around, you know, 40%, but the gross adds, the people that are signing up at a higher level than that. So you're going to continue to see converged devices represent a greater percentage of total devices, and that being smartphones, and that goes hand in hand with greater data adoption. The iPhone's the perfect example. AT&T now has 9 million iPhone users. You got a much better internet browsing experience, email experience, et cetera, and that just fosters more usage and more, you know, wireless data revenue.
All right, I want to thank you very much, William Power, coming to us from R.W. Baird, expert in the world of telecoms, talking about AT&T, Verizon. He does have a buy rating, though, on Metro PCS as well as Leap Wireless.